We're also at the very scary place, according to Representative Travis Couture, who's the Republican and budget lead on the House side. He says, if you ask supporters, Washington's new income tax isn't really all that bad compared to other states like Idaho. We have one side from the Economic Opportunity Institute weighing in on that, and what Representative Couture's thoughts are on that. He really believes we're on the cliff in this state. Okay, still speaking of the income tax. It seems like that's all we talk about, right? We told you last week about a new report from Mountain States Policy Center about how over the last 11 years, Idaho has slowly ratcheted down its income tax. They did that initially just as a percentage, and then last year in 2025, they went to a flat rate so that everyone, is paying the same percentage. Of course, you're gonna pay more if you make more money, but everyone is paying a flat and what many consider to be a fair rate for an income tax. So last week, I spoke with Annie Kuklik at the Economic Opportunity Institute. They are one of the big champions of the income tax, and she told me that Washingtonians who will pay the income tax, those for now making more than $1 million or a combined household income over $1 million, at least at first, are in much better shape than people in other states like Idaho that already have an income tax.
I've done some research on, there's some maybe misleading headlines around the quote unquote marginal tax rate of 9.9%. And I did some research just to determine the effective tax rate for people who would have to pay this. And, if you are a household who is making $1.2 million and you might have to pay this tax, you would actually be paying the lowest effective tax rate of all the states that levy an income tax. So I think that's something else to hold on to, right? Like when you're thinking about this, we have to think beyond just the marginal rate. We have to actually think about the effective rate, the amount based on your income that you'd be paying. And yeah, it would increase with your income, right? Effective will depend on like taxation divided by total income. So if your income increases, that rate will go up. But for a $1.2 million household in Washington state, they'll be paying the lowest effective tax rate regardless still, right? So
Right.
yeah, I think that's kind of an interesting.
Now, as Mountain State's policy report noted, Idaho's income tax being lowered over the last 11 years has generated more revenue, not less. So, important to keep in mind, they ratcheted down the threshold for the income tax, and yet the income tax itself has brought in more money each time they have done that. So, something perhaps for policymakers, supporters of income tax in Washington to keep in mind, assuming it's upheld in the courts. Also, important to keep in mind when you do the comparison between Idaho and Washington, it's not really a fair comparison because Idaho doesn't have a B&O tax. They don't have Climate Commitment Act taxes that impact us at the gas pump to the tune of more than 50 cents every gallon. They don't have payroll taxes and many of the other burdensome taxes that we have in Washington. So when you're considering the overall tax burden on state residents, Idaho versus Washington, you can't simply look at the income tax in a vacuum. You really can't. So Representative Travis Couture, who offered an alternative budget proposal, his budget was to proposal, which was not considered by majority Democrats, was an attempt to expand the working families tax credit. Now, remember, for supporters of the income tax, that is one of the main things that they've said. This is going to help us if we can push the income tax over the threshold. We're going to expand the Washington working families tax credit big time. You might even be able to make a very decent income and you're going to get a bigger tax return back. Of course, that's attractive to a lot of people. Now, Representative Couture's tax proposal was to use some of those Climate Commitment Act dollars instead to pay working families tax credit, an expansion of the working families tax credit. That was his proposal. As I mentioned, didn't go anywhere. But he says it's really important to remember that the return on taxes in our state is diminished because, as we've talked about a lot, jobs are leaving, high income earners are leaving. If the income tax is upheld in the courts, it is likely that we will see more of that. And many of us also, he says, because of the burdensome tax rate that we're already under with all these other crushing taxes, we have less discretionary income. We spend less out to eat. Most of us do anyway, not my teenagers. And we buy fewer, large dollar items. We maybe hold off on the purchase of a new vehicle and, try to limp our current vehicle along because we can't afford, higher taxes. So he says it's important to keep all of that in mind. And he really believes that we are at the tipping point here in Washington state when it comes to that tax burden.
As a state, we educate, medicate, and incarcerate. Those are the three big caseload buckets. And when we stop having an ability to pay for those in our courts because we've torched our economy, guess what? One of two things will happen: devastating cuts for the things that people need. In which will probably spur more tax increases on you, and it will just double the pain and make it all worse. Or the problems will just exacerbate to where they have to ratchet down an income tax into the middle class, which is exactly what will happen. By 2031, 2032, they will be ratcheting that income tax down, and then they will sell it like, oh, we're just shifting things around. We're going to get rid of some regressive taxes, but they will never truly go away. We will still have a carbon tax. We'll still have a gas tax. We'll still have sales tax. We'll still have B&O tax. And that's because one core element of all of this, and this is the heart of it all, we have a spending addiction in Olympia. We can't stop. And if you give someone who's addicted to something more drugs and booze to consume, in this case, more tax dollars, they will keep spending it. And so until they learn their lesson to live within their means and stop recklessly spending and curb the growth, extreme growth of state government, we will always need this money. We'll always run predictable deficits. And we just won't get it because we're hitting the Laffer curve where we see diminishing returns. The opposite idea, the alternative idea, my idea, is instead to create an environment where we have a great economy where you can grow, where you can build housing, where you can develop things. That means predictable, steady, low taxes to give people the ability to go and do what they do best, and that is build out Washington. That helps every single person in the state of Washington, and it grows the revenue pie quite significantly so that we have the revenue to pay for the essentials of government. And at the same time, we need to focus on the priorities of government, focus on those essentials, and stop sending money for wasteful programs that don't deliver any results. It's not rocket science. You just got to have people with the willpower to do it.